Welcome to the Deep Dive, where we cut through complexity and deliver the insights you need to understand the world. Today, we're not just looking at history as, a record of failure. We're actually seeing it as a blueprint for some pretty ingenious self-reliance. We're journeying into the absolute economic chaos of the Great Depression. And we want to explore how ordinary Americans really refused to be victims of a crashing system, how they built their own financial and social lifelines instead.
Yeah, that era, the 1930s, it's arguably the most critical case study in, the history of finance and social organization. Our sources, they characterize the Great Depression as nothing less than the most spectacular failure of capitalism, understanding that crisis context is just vital, and the numbers, even today, they're still startling.
Oh, they're more than startling. They're frankly terrifying. I mean, we're talking about an economy that just fell apart. Gross domestic product GDP rate reduced by a staggering 30%. That's almost a third.
A third gone, and industrial production plummeted by 47%. Just try to picture that.
Yeah, think about the physical stuff, the factories, that output that represents just vanishing.
And that vanishing act, it was felt directly in people's homes. Unemployment in 1933, it peaked at 24.9%.
Nearly 1 in 4 Americans without a job.
Exactly. And just for comparison, the Great Recession, 2007 to 2009, that felt catastrophic to many of us.
Right.
That saw a GDP reduction of 4.3%. The Depression was, an order of magnitude worse. It led to mass destitution, starvation, the rise of those shanty towns they called Hoovervilles.
Okay, so our deep dive mission today is really to move beyond that despair and analyze the functional grassroots response. When Wall Street and traditional finance basically crumbled, what did the working class do? What powerful, self-funded institutions did they create? So we're exploring mutual aid societies, cooperatives, credit unions, and crucially, the surprising, sometimes really radical social and political agendas these self-help solutions often carried.
Right. We're looking at organizations built on reciprocity, on collective action. They weren't created just to offer, a temporary bandage. They were meant to address and, sometimes violently oppose the actual structural conditions that caused the crisis in the first place.
And before we even unpack the historical roots, we've got to plant a flag, I think, on maybe the most radical organization we'll cover.
Yeah.
The International Workers' Order, the IWO. It was a Depression-era mutual aid society that became this, explosive agent of radical inclusion. And it was unified by its really defiant rallying cry, "No Jim Crow in the IWO."
And that wasn't just a political slogan, was it? It was their operational model. It fundamentally changed how aid was actually delivered.
Exactly. So let's maybe start at the beginning. Let's define the fundamental mechanism here. We use this term mutual aid, but how do we really clearly distinguish it from, say, traditional institutional charity?
Okay, so mutual aid, it's defined by a few key things. Non-hierarchy is one. Voluntary collaboration is another, and maybe most importantly, the unconditional exchange of resources and services. It's basically a reciprocal circulating fund among community members. You pool resources, sort of anticipating you might need them.
Right, like insurance you build yourself.
Kind of, and when you do need them, you draw them out without moral judgment attached.
That unconditional nature that feels like the key insight we really have to hold on to here. Because traditional charity, especially back then, 19th, early 20th centuries, it was just saturated with conditions, wasn't it?
Oh, absolutely. It involved means testing, moral prerequisites, often this really arbitrary distinction between the deserving and the undeserving poor.
Right.
Mutual aid, though, it's different. It's collective insurance based on that expectation of reciprocity. It's a system of economic protection built by peers for peers.
And that shifts the power, doesn't it?
Completely. When aid comes through charity, the power really rests with the donor or the institution that's, providing the moral guidance. But when aid is reciprocal, the power rests within the collective membership itself.
Which makes sense.
And this organizational model, it naturally fosters political participation because people aren't just surviving, they're actively challenging the system that made the shortage, the need necessary in the first place.
Okay, so to see this model really take root, we need to look back to its European foundations, specifically the upheaval caused by the Industrial Revolution, say, between 1750 and 1850. You have this massive shift of workers into these harsh, urbanized factory systems.
Yeah, and that made the need for self-protection immediate and really acute.
Right. So who was thinking about this first?
Well, initially, the philosophical rationale, it came from utopian socialists, people like Robert Owen, Charles Fourier. They envisioned this perfect, harmonious, cooperative society.
Kind of dreamers, in a way?
A little bit. But the sources show that the practical, the executable foundation, that came from much more pragmatic figures, like William King.
Okay, King. What was his approach?
King, through his publication The Cooperator, he wasn't really advocating for these distant utopias. He was pushing for small consumer cooperatives, things that could actually be started with minimal member capital.
Hmm.
His focus was really on the nuts and bolts, democratic control, member education, member capital, basically the blueprints for the modern co-op.
Getting it done, not just dreaming about it.
Exactly. And this pragmatic approach, it found its clearest expression in 1844 with the Rochdale Society of Equitable Pioneers in England. They formalized the set of principles: open membership, democratic control, distributing surplus back to members, education that became the sort of foundational DNA for cooperatives all over the world.
Okay, so that's the general cooperative structure.
Yeah.
Now let's look at the financial side, specifically the credit union model. That's
Yeah.
developed in Germany, right?
Yes, and there were two distinct but sort of complementary streams emerging there in the 1850s.
Okay, who were they?
First, you had Franz Hermann Schulze-Delitzsch. He focused mainly on urban workers, artisans, small business owners. He was a real champion of sound management, good organization. He recognized early on that for a cooperative to be financially stable, it really needed formal legal recognition.
Makes sense. Structure matters.
Definitely. He established this concept of the bond of association, meaning members had to have some shared connection. And he secured the first national credit union law in Germany in 1871. Crucially, he also recognized the need to separate retail lending from, say, purchasing business inputs to maintain sound cooperative financial practice.
Okay, so some important technical nuances there for stability.
Right. And then the other stream was Friedrich Wilhelm Raiffeisen. He operated mostly in rural settings, and he was driven by this deeply humanitarian ethos, often responding directly to things like famine.
So a different motivation, perhaps.
A different emphasis, maybe? Raiffeisen really emphasized the volunteer ethos. His officers often served without pay, focusing solely on mutual uplift, community benefit. So while Schultz emphasized legal structure and sound business practices, Raiffeisen emphasized the common bond, the collective ethical responsibility. He provided sort of the moral bedrock.
Interesting. So you had both the technical, urban focus and the more humanitarian, rural focus kind of converging.
Exactly. And those two approaches together created the basis for the modern financial cooperative, the credit union as we know it.
Okay, so how did this, sophisticated European architecture translate over to America? And what contradictions did it maybe carry with it? Because by 1920, fraternalism here was massive. I mean, the numbers are huge.
Yeah.
Conservatively, 1 in every 3 adult men belonged to some kind of society.
Yeah, they were huge. These groups were the primary working class lifeline. They offered low-cost insurance, sick benefits, death benefits, all this stuff, long before government welfare programs really existed.
Like parallel states almost for the working class.
Pretty much. But they were inherently discriminatory. Mainstream organizations like the Odd Fellows or the Masons, they were segregated, white-only lodges, which immediately forced marginalized groups to create their own powerful parallel systems.
Right. That discrimination actually spurred innovation in a way. You see Black organizations like Prince Hall Freemasonry, founded way back in 1776, and the Grand United Order of Oddfellows in 1843. They arose specifically because of that exclusion.
Absolutely. And women were generally served by auxiliaries, like the Daughters of Rebecca for white communities and the incredibly powerful Household of Ruth for Black communities, founded in 1858.
And we have to emphasize, these weren't just about handing out money when someone got sick.
No, not at all. They were engines of political and social change. Think about the Independent Order of St. Luke, led by the amazing Maggie L. Walker. She established the St. Luke Penny Savings Bank.
Which wasn't just a bank.
Right. It was an act of economic warfare against Jim Crow. It provided essential financial services that white institutions deliberately denied Black people. Black fraternal organizations funded hospitals, schools, critical civil rights organizing. They were building power.
Okay, so that historical foundation really sets the table for the Depression.
Yeah.
When the whole economic system just collapses, these existing ideological tensions within these societies, they must have just snapped.
They did, and that brings us right back to the IWO, the International Workers' Order. It was born out of a major politically charged split in 1929, right within the Jewish workmen's circle.
Okay, so what was the split about?
Well, the IWO represented the radical faction. They called themselves a class struggle society, and they had direct links to Communist Party activism at the time. They viewed the Great Depression not just as some unfortunate downturn, but as actual proof that the capitalist system was fundamentally corrupt and needed replacement, not just reform.
And that political stance translated directly into how they operated, didn't it? Creating their most radical feature.
No Jim Crow in the IWO. Yeah. This meant they were the first healthcare service provider where literally any individual, regardless of race, status, gender, religion, received equal benefits at the exact same cost.
That sounds revolutionary for the time.
It absolutely was. When the entire system around you is built on segregation, when a Black worker historically pays more for insurance or gets worse quality care, the IWO's policy of equal price for equal service became this incredibly powerful, tangible organizing tool. It functionally demonstrated racial and ethnic unity during a period of really intense division.
So it created genuine unified front in practice.
Yes. The sources detail how you had Jewish members, Slavic members, Italian Catholics, Hispanic people, African Americans, including Black Muslims, which is notable Arabic leftists, all working literally side by side. It wasn't some theoretical alliance. It was built on shared equal access to vital services like healthcare and insurance.
Wow. Is there, like, an example of how members felt about this?
Yeah, there's a really powerful testimonial from Pacola Moore, an African-American member. She noted that while the financial benefits were obviously critical, her main attraction was that the order genuinely practiced brotherhood and democracy. Her lodge wasn't just, paying out insurance claims. It actively fought for issues important to Black people. They celebrated Negro History Week with cultural and educational programs. The aid was holistic, cultural, political, and financial.
But I have to ask, structurally, how did the IWO actually sustain this? I mean, they were offering unconditional, low-cost aid to populations that were often deemed high risk and systematically excluded by the traditional segregated insurance models. Did they just absorb that risk, or was there some other economic factor at play?
That's really the core tension, isn't it? They did absorb risk, absolutely. But their success was also deeply linked to their ability to mobilize and organize effectively. Their very progressive stance on health rights was key here. For instance, they were among the very first places where working-class women could access birth control.
Which is still criminalized in many places then, right?
Highly criminalized, often classified as pornography under obscenity laws. So providing access was a radical act in itself.
And they operated in a way that actually respected the reality of working-class life.
Exactly. The New York Medical Department apparently praised the IWO's medical center as one of the finest and best equipped. But crucially, they also noted that it stayed open late in the evenings.
Which matters hugely.
It's critical. A working-class woman couldn't just take a day off work to go to a midday clinic, so the IWO adjusted its operating hours to meet the actual need, making the service truly accessible, not just theoretically available. They also sponsored things like mass public health X-ray sessions, focusing on prevention and education for the whole community.
It's impressive.
And despite being politically targeted, labeled subversive, by 1947, the IWO had grown to 180,000 members. Its success really proves a fundamental insight that unconditional mutual aid rooted in genuine equality can be a far more effective organizing and sustaining force than a moralistic conditional charity.
And that contrast brings us directly to this paradox of aid we see in the more traditional societies. While groups like the Household of Ruth or even the Workmen's Circle provided essential lifelines, their selectivity, their morality clauses, they often actively excluded the very people who might have needed help the most.
Yeah, often pushing them towards charity anyway, ironically.
Right. What were some of those criteria?
Well, the selective criteria could be pretty brutal. They typically required members to be of sound mind and body, often demanded a doctor's note upon application.
So basically like an insurance company today.
Exactly. It functioned precisely like an insurance company, excluding people with disabilities or pre-existing conditions, which is, fundamentally at odds with the spirit of collective reciprocal aid.
And then there was the moral policing.
Oh, the moral policing. It was relentless and, frankly, sometimes absurdly bureaucratic. We have sources detailing the stringent rules right in the Household of Ruth's Lodge Constitution. Not only could they deny support if an illness was supposedly caused by immoral practice or intemperance,
which sounds incredibly subjective.
Highly subjective. But to even claim sick benefits, a member needed a medical certificate with a notarized seal for each week they were sick.
Each week?
With a notary. Each week. Imagine the bureaucratic effort involved for someone who's sick, probably destitute, to track down and pay a notary every single week just to get a modest benefit. This level of bureaucratic suspicion, designed to guard against malingering or faking illness, it really rivaled the worst of the organized charity systems, even within organizations founded on working-class solidarity.
Wow. Even the workmen's circle, with its socialist roots, wasn't immune.
No, they were highly disciplinary, too. They policed against false sick claims, apparently, and
Yeah.
sometimes disciplined members for what they considered unworking-class actions, like charging usurious interest rates or supporting political parties they deemed capitalistic.
So a lot of internal policing.
A lot. And the IWO's great structural advantage, perhaps, was its refusal to engage in that kind of moral arbitration. They chose instead to focus resources on immediate, equal delivery of care and benefits.
Okay, so while the IWO focused on benefits and healthcare, there was this complementary movement happening with credit unions, focused more on democratizing access to capital, ensuring financial stability, and this built directly on those German cooperative roots we talked about earlier.
Exactly. That model found its way to North America primarily through Alphonse Desjardins. He was a French-Canadian court reporter, actually, and he was deeply disturbed by the usury, the predatory lending that was plaguing his community.
So he saw a problem and looked for a solution.
He did. He studied the European models and formed the first North American credit union in Lévis, Quebec in 1900, proving the concept could work outside of Europe.
And his work influenced the U.S.
Hugely. Desjardins' work was instrumental in setting up the very first U.S. credit union in Massachusetts in 1909. And he helped draft the first state-level credit union law there. But the push to build a truly national movement, that needed a powerful catalyst. And that arrived in the form of Edward A. Fellini.
Ah, Fellini. The Boston merchant, right? The millionaire philanthropist.
That's him. Fellini was the American pioneer. He traveled, saw these models, and understood that this cooperative financial structure was the structural answer to exploitative banking practices back home.
So he brought the vision, but who built the machine?
Fellini hired a lawyer named Roy F. Bergengren in 1920. Bergengren became the organizational architect of the national movement. His systematic, really dedicated leadership through the Credit Union National Extension Bureau was absolutely critical in scaling the movement, taking it from just a few isolated institutions into a national force ready to withstand the crisis that was coming.
Okay, so let's talk about the structure itself. How does a credit union embody that mutual aid ethos in finance?
Well, the fundamental structure is key. They're not for profit. They're owned by their members. Your deposit isn't just a deposit. It's technically a share. It makes you an owner, essentially.
Like buying a tiny piece of the pie.
Exactly. And profits, instead of going to outside stockholders, are returned to the members, usually as dividends or lower loan rates, better services. But this structure, it did more than just feel good ethically. It proved to be an absolutely essential insulator during the Great Depression.
How so? What was the mechanism?
Okay, so here's the thing. When the Depression hit, hundreds, thousands of commercial banks failed. Gone.
Right, we all know those stories.
They were structured to rely heavily on external investors, on wholesale funding markets. When those markets seized up, just froze.
The banks couldn't lend.
They couldn't continue lending. They had no money coming in. Credit unions, conversely, were funded primarily by their own member deposits, by the savings of their owners.
So they were insulated from that external investor panic.
Precisely. Because they were insulated, they had the structural flexibility to continue servicing their existing members, even when profits were low or maybe non-existent. There were no external shareholders banging on the door demanding immediate quarterly returns. The mandate was the stability and the welfare of the member owners. This internal funding mechanism provided this crucial stability that was just absent in the broader financial system at that time.
And that model obviously worked.
The numbers speak for themselves. This member-owned financial structure, it grew exponentially, and it remains a massive global force today. We're talking over 260 million members worldwide, assets totaling trillions of dollars. It's really a testament to the enduring power of cooperative finance.
Okay, so the stability the cooperatives demonstrated during the crisis, that wasn't lost on the government, right? The Depression actually spurred the federal government to formalize and institutionalize the cooperative model, integrating it into the New Deal recovery strategy.
Indeed, it did. We saw key legislation emerge almost immediately. The Farm Credit Act of 1933, for example, created banks specifically for agricultural cooperatives. And critically, the Federal Credit Union Act, the FCU Act of 1934, that created a whole new class of federally chartered credit institutions. Its stated purpose was promoting thrift and providing credit for provident or productive purposes, basically helping people save and get fair loans.
Is there a good example of how this government support and the cooperative model work together?
Oh, a compelling example is the Rural Electrification Act, the REA, from 1937. Investor-owned utilities, the big power companies, they had basically zero interest in stringing expensive power lines across sparsely populated rural areas. Just wasn't profitable enough for them.
Right, leaving huge parts of the country in the dark, literally.
Literally. So the REA established a federal lending agency to finance electrification projects. But, and this is key, it only really succeeded because the cooperative model was already familiar to people in those rural areas.
Because they were already doing it for other things?
Exactly. Farmers, having already built mutual aid societies, farmers' co-ops for buying seed or selling crops, they quickly formed rural electric cooperatives to access that federal financing. They brought electricity to huge swaths of the country that had been completely ignored by the private sector. So the government provided the capital, yes, but the cooperative structure provided the organized community capacity to actually execute the project on the ground.
That's a great illustration. And while this was happening federally, Black communities continued to leverage the cooperative model specifically as resistance, right?
Absolutely. We mentioned Maggie O. Walker's St. Luke Penny Savings Bank earlier, but because Jim Crow also severely restricted access to affordable health care, Black fraternal organizations often established their own hospitals, like the Taborian Hospital in Mound Bayou, Mississippi, founded in 1941. These places trained Black healthcare workers and provided essential quality care that was otherwise unavailable. Cooperatives were literally building parallel infrastructure where the state had failed or was actively discriminating against them.
Okay, but let's fast forward to today. We see that while credit unions are now sophisticated financial institutions, they still operate under some unique constraints compared to commercial banks. This is where the policy discussion gets kind of deep, doesn't it?
It really does. The primary restriction still is the common bond. They can generally only lend to members, and membership is usually based on that shared bond, like where you work, an association you belong to, or a specific geographic area you live in.
Okay. But the really significant constraint, the one that gets talked about a lot, is the member business loan cap, the MBL cap.
Right. This is a statutory restriction put in place by Congress back in 1998. It caps most credit unions' commercial lending loans to businesses at 1.75 times their net worth.
Okay, what's the thinking behind that cap? Why limit their business lending?
Well, the philosophical and policy rationale behind it is pretty interesting, and it seems to be twofold. First, Congress clearly intended to keep credit unions focused squarely on consumer needs and maybe very small business needs, specifically serving, quote, persons of modest means.
So keep them focused on their original mission, essentially.
Right. And second, it was also about protecting the credit union's nonprofit tax-exempt status. Lawmakers seem to fear that if you allowed credit unions unlimited access to make large commercial loans, they'd start looking and acting just like for-profit banks. And that could lead to them losing their tax exemption and maybe, just maybe, introducing more systemic risk into institutions that were designed primarily for consumer stability. So it's kind of a protective measure meant to enforce their consumer-focused identity.
Okay, that makes sense. And that constraint is probably why their main regulator, the NCUA, the National Credit Union Administration, has put specific programs in place targeting consumer needs that bigger banks might ignore.
Exactly, like finding alternatives to predatory lending.
This is the PD Alternative Loans Program, right? PLs.
That's it. The NCUA created PLs the first and later PLs the first specifically to be viable alternatives to those conventional, often incredibly high-interest payday loans. PLs the second, for instance, allows for loans up to $2,000, which is significantly more than a typical payday loan, and it mandates an interest rate ceiling of 28%, which sounds high, maybe, but it's a massive reduction compared to the 300% or 400% annual interest rates sometimes charged by unregulated payday lenders.
It's a huge difference.
A world of difference. And the policy design tries to ensure the consumer doesn't get trapped in that awful debt cycle. PL's loans must be fully amortizing, meaning each payment gradually pays down both the principal and the interest over a set period, up to 12 months for PLs the second. And crucially, the NCUA prohibits credit unions from charging overdraft or insufficient funds fees for PL's loans drawn against member accounts. That's explicitly designed to prevent that negative account balance cycle that traps so many payday loan users.
So really designing it to be helpful, not harmful.
That's the goal. And this dedication to serving underserved populations, it leads directly into a major current policy debate. Should a Community Reinvestment Act, a CRA-like framework, be applied to credit unions?
Okay, explain CRA briefly first.
Sure. The CRA currently applies to banks. It basically requires them to meet the credit needs of the entire communities they serve, especially focusing on low and moderate income, or LMI, neighborhoods. It's primarily a geographic mandate.
Right, so given that the NCUA is pushing for financial inclusion, why not just apply the same rules to credit unions?
Well, many advocates argue exactly that. CRA should face a CRA mandate too. But applying that existing CRA framework is actually incredibly complicated because of the credit union's core structure.
How so?
Remember, CRA requires geographic lending equity. But the credit union model relies on the common bond, which is often about occupation or association, not geography. So these are often in philosophical conflict. It raises the really tricky question of how you tailor a regulatory standard designed for large banks serving a broad geography to fit much smaller institutions that might specialize in, say, auto loans just for teachers in a specific district.
Yeah, that customization challenge sounds real.
It is. Something like 90% of federally insured credit unions hold assets of less than $500 million. They're small compared to banks. Imposing the really robust data collection and compliance requirements of the existing bank CRA framework would likely be disproportionately burdensome, maybe even crippling, for many of these smaller entities.
And their lending patterns are different too, right?
Very different. Credit unions are often really heavy on auto loans, for example, which are a major product in LMI credit markets, definitely needed. But they're less central for the big banks that CRA currently focuses on. So regulators face this dilemma. Do you award CRA credit for, or even encourage making subprime auto loans, even if those products, maybe like the Payalas loans, are demonstrably beneficial for financial inclusion in that context? It's complex.
Yeah, it sounds like forcing a square peg into a round hole.
That's why the NCUA currently seems to favor voluntary initiatives like its ACES program advancing communities through credit, education, stability, and support, encouraging CUs to focus on community development in underserved areas, but without the mandatory, potentially prohibitive bank-style compliance regime. It's an ongoing discussion.
Okay, so wrapping this up, what we've really seen today is this deep dive into self-organization, driven fundamentally by necessity. We track the response to that spectacular failure of capitalism, as the sources put it, through these institutions built on reciprocity.
Yeah, from those early philosophical origins responding to industrial upheaval, we moved through the really radical social platform of the IWO, a model that used unconditional aid as this powerful tool for achieving racial and class unity. And we arrived at the structural stability offered by modern credit unions. These were all institutions created by communities precisely when traditional financial and welfare systems had either completely failed them or were actively excluding them. It just shows that instability can breed really powerful collective response.
And the source material really stresses that this story is far from over. The economic need for mutual aid for these kinds of structures is arguably urgent again today, driven by the current collapse or stagnation maybe of workers' purchasing power, rising inequality. We're seeing similar models used successfully in contemporary organizing efforts too.
Absolutely, whether it's things like the Amazon Labor Union providing necessary support to organizers or other large-scale community resilience initiatives popping up. And we have to remember the political context the sources mention. Today, the working class has minimal direct representation in government, less than 10% of city councils, maybe 2% of Congress. So when those traditional avenues for change feel closed or just inadequate, these self-governed cooperative solutions, they almost become inevitable again.
So this really leads us with a final provocative thought for you, the listener, to maybe mull over. Given that the success of these massive mutual aid movements we discussed, they hinged entirely on organizations growing because they provided aid that workers desperately needed. Whether that was low-cost insurance in the 1890s or equal healthcare access in the 1930s IWO or essential financial services under Jim Crow, what specific, critical, and currently unmet need exists in your community right now? A need so essential that perhaps a new self-governed cooperative solution is becoming, or maybe already is, inevitable.